Good evening to one and all. First of all, I'm very much privileged to be one of the speakers of this wonderful event. My name is Fredy Baby. I represent Crib Markets Limited. And before just start jumping into my topic, the Forex trading, I would like to just give a brief introduction about myself. So, a couple of years ago, while I was pursuing my bachelor's degree, I started trading in Forex. And literally, guys, I had no understanding about Forex trading, what it is. But since I found myself more interested in it, rather than just scrolling on Instagram and TikTok Reels, I spent more time on it. I researched, I gathered information from various possible resources. And today, when I introduce myself as Operations Manager in Crib Markets Limited, which is one of the well-known Forex brokerage market out there in the market, I believe my hard work has paid off. So today, I would like to just give you same exposure, the same understanding which has brought me till this, where I stand today in front of you. That is all about Forex trading. So let's not wait and let's start. First of all, what is Forex trading? I believe almost everyone understands what is Forex trading, but still there are a lot of people out there who still do not understand, or they believe, or they have different myths about Forex trading. And today I just would like to give a different understanding or the right perspective to understand what Forex trading is. So Forex or FX, which refers to foreign exchange, wherein foreign exchange has provided a wide variety of opportunity for the people out there to trade between the exchange rate of hundreds of currency pairs out there in the market. For example, if you consider here USD AED, which stands for 1 USD converted to 3.67 AED. This conversion, this exchange rate varies or differs over time to time. There are multiple reasons why this conversion rate, or why this currency or the exchange rate differs. So people, or the Forex exchange has provided an opportunity or has opened up a door for the people to trade in this exchange rate or in this varying exchange rate. Now, there are various, as I told you, there are various reasons for the exchange rate variation. Some of them are public debt, inflations, interest rates, terms of trades. So all these factors, these are just few of them, but there are many factors which makes the changes or the variations in the currency pairs. Now, you might ask, there are so many currency or the trading markets, but why Forex market? So I have listed out few of it. So first one is open for 24/5. It's like almost all the weekdays it's open, unlike the Indian market, in the stock market, it's open on all the 24/5. Then minimum investment. When I tell you about minimum investment, today at the end of my speech, I have an offer for all of you out there who are sitting here. I would like to just give you an open offer, so that please be with me till the end of my speech. The third one is low commission. Unlike many other Indian stock markets or other stock markets, Forex has always been coming forward with very low commission, high leverage up to 1,000, and then you have high liquidity. And the fifth point, which says that Forex is one of the biggest market with an average of daily turnover, I would like to give a brief on it. If you see the market. If you see in the stock market, the average daily trading volume is 1 billion. London Stock Exchange is 7.2 billion. Tokyo Stock Exchange is 18.9 million. New York Stock Exchange is 22.4 billion. But Forex is nowhere there. It's almost more than 7 trillion. So this is how big Forex market has been over the duration of time. Now, how Forex works? Now, if you see over the tunnel, the Forex market works in 4 different ways. The first and foremost are the dealers or the huge banks which provide the exchange rate and their variations. Then the second one comes the liquidity providers or the hedge funds who indeed provide the opportunity for the brokers or the retail ECNs to show up their face, show up their company for the normal customers in the market, in the world. Now, when we go to the Forex, I would like to just give you an over nutshell understanding of the Forex. So I won't go much deeper on the Forex, but Forex is concised in lots and pips. So when like how to trade in Forex, there are different ways in trading Forex. So first, the two main factors are lots and pips. There are mainly three different types. The first one is standard, which says 100,000 units. Like for example, if you consider the first example or the third example, like GBP USD, so standard lot or the standard volume is 100,000 units of GBP USD or Euro USD, which is one of the very well known and very much traded currency pair. So in that, one single pip movement provides a $10 profit or loss. Similarly, there is the second level is meaning, which says that 0.1 volume you take a share. Like for example, in Indian stock market or other exchanges, you take a part of the currency pair or you take a part of the share. In Forex market, you take a part of the volume. Either you take one full volume, you take one full bite, or you take 1/10 of the fraction, or you take 1/100th of the fraction. So this is about how huge you want to buy on the currency pairs. Now, leverage. This word has almost conquered all the exchange markets, all the stock markets out there. It says that even if you do not have the ability to get one full standard volume, or you do not have the ability to take higher volumes, leverage helps you to do that. But at the same time, there are a lot of drawbacks for leverages as well. But I would like to just give you an understanding about how leverage works. For example, as you can see on the other side, if you just have $1,000 with 100 of leverage, you can have 100,000. The power to conquer or the power to purchase or buy or sell 100,000 volume using the leverage. So leverage has always conquered the Forex market. Now, one of the best USP of Forex market is in Forex market, unlike the other stock markets, you can hold the short sellings for more than a day rather than just having an intraday. Now, this is something where I would like to give you more understanding about, which would eliminate a lot of myths which a lot of people might have out there who are sitting here. So first one is, when you enter into Forex trading or when you enter into the Forex world, these are the four fundamental things that you need to have in your understanding in your trading pattern. The first one is the basic and technical analysis. The basic stands for understanding the currency pairs, understanding its evolutions, its processes, and the technical analysis says that you need to have a basic understanding of the charts. You should be able to read charts, indicators, price actions, trends, chart patterns, volumes, the buyer and seller data. You need to have a proper understanding, or at least a basic understanding about the technical analysis before you step into or before you take a step in Forex market. Then the second one is risk management. Yes, of course. See, for example, even if you start driving your car on the road, there are so many risk factors. You manage a lot of risk factors while driving. It's not like you eliminate the risk factors before driving. You cannot say that I have eliminated all the risk factors from my source of destination, from my start to the end of my destination. It's all about managing the risks that is coming throughout your journey. So when I say about risk management, these are the four things. The first one is win rate. Now let us take an example. For example, in a month there are 22 working days. If let us consider that you earn $1,000 a month. Now win rate says that in 10 days if you lose and in 10 days you win, it's like 10,000 win, 10,000 lose. It's like nothing. You end up in just a zero. There is where you bring on the risk ratio reward, which is always saturated to 1:2, or which is very well explained with 1:2 ratio, wherein if you take a risk of 1%, your reward should be 2%. So this, when collaborated with win rate, it should be, if you lose 10,000 in 10 days, you should be able to win 20,000 in the other 10 days, which would give you a net profit of 10,000 in the overall month. This is how you should be able to plan the risk reward ratio, even if you're putting a smaller step in Forex market. Then the third one is risk per trade. You should always have in your mind, whenever you place a trade, there should always be a stop loss or a target. There should never be an open trades. There should never be an unlimited or unrevealed stop loss or target. There should always be a stop loss, a target, so that even if you take a loss, there should always, the loss is not less, and the target is upon you, how you make the targets. Now, the third one, as we go down to the third one of psychology. Psychology is the most important factor, and while preparing this presentation, I've just gone back to all the testimonies from the customers, from the clients that we have come across to their stories. Since we have been here in this market for more than 10 years, we have gone through a lot of stories of the customers, and these are the consolidated points of those stories. The first one is, making money should not be only your goal while trading in Forex, or be it in any exchange, or be it in any trading. Only making money should not be your goal. The entire process, the entire discipline, the entire risk management, every factor matters whenever you do a trading. Now, if your mind gives you an opportunity to select between luck and maths, it's always maths, because luck can give you, of course, luck will give you an output, but that is a 50-50 chance, but maths is 90% of win ratio, always for the maths. And then, whenever you trade, you should not look only for the profit and loss, but it's all about the target and the stop loss that you put and that you calculate. Now, what are the possible outcomes in the Forex trading? Now let me give you a very good perspective. Possible outcomes would be big profit, which is the dream of a lot of traders, beginners, the intermediates, the mediocre traders. It's a dream for a lot of people. Big profit, small profit, break even, small loss, big loss. If you remove the fifth one, which says that big loss, the remaining would make you almost a very good trader in Forex, in the Forex exchange market. Now, why 95% traders fail in Forex markets? If you can read out with me, there are so many points I have consolidated, but worthy of the points. The first one is trading without proper knowledge. As I told you, when you say about knowledge, there are risk factors, there are psychology, there are so many different terminologies that you have to keep in mind while trading. Then the second one is based on just some tips or signals or some calls, some random entries, or based on some news, lack of discipline or consistency. All this makes people lose in Forex market. But if you have a proper plan, proper planning in your Forex trading, you can always be a good trader with a good if you trade with good psychology, with good mindset. If you have a proper stop loss target, there is always a win-win situation in Forex trading market. Now, as I come to the end of my presentation, as I told you, I have a surprise for all of you. Today, as Grid Markets, we have published pre-funded accounts for all the people who register with us, $100 account or even more. It depends upon how you get or what the surprises you get. you get a free funded, you do not have to pay anything. You just register and you get a free funded amount from us, and you are ready to trade. And we do provide Forex education as well. So once you join with us, you start a venture in Forex trading.